In today's episode, I'm going to be doing a analysis of what to expect for this coming week. As you all know, gold is my major, and I love gold. Gold, gold is dishing out so much for us now. So if you master the skill, you are going to make a lot of money. Just follow this easy step, easy strategy. For this week, you will make money. Now, as you can see, we all know that gold is on uptrend. So the market is going up, right? So like I've always been teaching, even my students, that price action is the king. I do not use indicator, or even I do not use candlesticks to determine my setup. I only use price action. Do you know the reason why I don't base my strategy on only candlesticks formation? Is because of different brokers printing different candlesticks. Now, the problem with using candlesticks formation is that different brokers print different candlesticks, which deceive. They are not accurate, they deceive. So, in some other broker, they will print a, take for instance, a typical example. In some broker will print, this is a bearish engulfing. So now this is what is showing. But could you believe that if we go to another broker, another chart with another broker, this might not be. This might even be weak rejections. So you see, they keep showing us and giving us different candlesticks, which is why I don't use that, because there's a lot of deceit in it. My outlook for this coming week, market is bullish, no doubt. So previously, this happened. Something like this happened previously. There was a what? Consolidation. Okay, so let me put a box there so that you can understand what I am talking about. So previously there was a consolidation right here. And what happened? What do you think happened? Do you remember? So type in the comment section if you remembered what happened here without checking your charts. What happened? Did the market continue buying or did they continue selling? If you're able to get the answer for this, then you might already know what could happen this coming week. Though we are all speculators, that is not static, so it can change. Now, what happened was that as this consolidation was happening, it happened, with my strategy, high, low, break. Now, I was looking to see, is this market going to break this high or is it going to break this low? Guess what happened? That's why when it comes to trading, you have to put a lot of patience. Patience has to come in. No hurry, but if you stay patient, you will gain. Because, and if you're not confused or distracted and forgetful, you will definitely make it. So, I was looking to see when what is going to happen. Is this going to break this low or is it going to break this high? Now, if you're smart, what you would have done or what you will do is to put a box like so and wait when it will break. If it breaks down, it means we are going to sell. If it breaks up, it means we are continuing buying. And if it breaks down, it means selling, and that will be a correctional market. Now, see, it broke down, it broke out. So, this breaking means what? Selling. And of course, you know that when the market breaks, you don't just jump in. What you will do is that you wait for a retracement or you wait for it to create a high and a low. That's the easiest way to go about it. So you wait for it to create a high and a low on a lower time frame. Once it breaks that low, even if it breaks high, no worries. If it breaks high, that's when to enter for a sell. If it breaks low, then you wait for another retracement before you now enter for a sell. So as it has broken this low, so we wait for a retracement. And like I trade, I like to target the beginning of every impulsive move. So the moment he printed this, there's this weak rejection, fine, but the weak rejection doesn't always happen all the time. But for the fact that this weak rejection happens, so the moment he started printing sell, I hop in somewhere here for a sell. So somewhere here, you see that what happened, that the market started selling and it retraced back before the real push. Now, like I said, you wait for the market to create a high and a low, to be in a safe side. Once you create that high and a low, what are you going to do? You'll simply put a line here and another line here, and then wait for it to break it. The moment it breaks it, you're entering. So, but because I am so used to it, I don't do that anymore. So initially when I started, that's what I do, just to refine my entry. So, but these days what I do is, at the moment I see this weak rejection and it starts to give me a bearish candle, sell candle, I hop in immediately. Once I hop in, my stop loss will be below that candle. Below that candle, that is where I will be looking at. So as soon as I put this line, I'll be looking at, is it going to come back and break this up? Because the moment it breaks this up again, that means this setup is not valid again. So you put a line here, put a line here, and then you wait for it to break it. The moment it breaks it, you enter immediately aggressively. As you enter, then your stop loss will now be here, below this candle. That is where your stop loss will be. So you enter and your first take profit will be low this low right here. That will be your first take profit. Then as soon as it breaks this place, as soon as it breaks this low, you now enter again, enter second position. So you wait for retracement back and then you enter second position. When you enter second position, this will be your next TP. So if you break here again, you enter again, and this will be your next TP. Yeah, this will be your next TP. And then the fourth TP will be here on the body, not on the wick. Not on the wick. Though on the wick is 50-50, but I like always to put on the body, because definitely it will get on the body, but on the wick is not always guaranteed, because if it gets on the wick and it breaks it, that means it's pushing down with the more. But if it gets on the wick and it bounces back, it means it's reversing. So the current market, what are we looking at? What are we expecting? As you can see, the same thing that happened last week is happening already. So what are you going to do? You put a pause. So when market opens, you wait to see, where is this market going to break? Is it going to break up or is it going to break down? Of course, from the previous analysis we did, you know that if you break down, that means it's going to repeat the same thing that happened previously. It breaks down, it's sell. It breaks up, it's buy. It's that simple. Don't forget to like this video, share this video, give us a thumbs up, and do send in your comment. I would like to know how you're doing. Some broker you can use. Of course, I have the broker that I use. I use SNES. The link will be in the bio. If you want to use that same SNES, fine. The reason why I love SNES, number one, SNES is user friendly. Number two, as a beginner, when you're using SNET and you want to start practicing on how to trade gold, before you can start investing or using real money to practice any strategy, it will be advisable that you open a cent account. And SNES offers that. You can open a cent account with SNES and you can open as low as $1. And when you open $1, that translates to 100 cents. And that is where you can now practice all your strategies, how many positions to open, how you make profit and all that. So if you fund $1, of course you can't fund $1 with SNES. You have to fund at least minimum of $10. But when you fund that $10, you can open another account, another cent account, and then transfer $1 from that your $10 to your cent account for practicing. Then when you transfer $1 to have to your cent account, it becomes $100, 100 cents rather. And then you can practice all you want with that. That was what I did anyway. And it helped me to build my momentum, to build my boldness and my confidence when it comes to trading gold. So you need to do these things so that in doing so, you will now develop your own strategy. And another broker I will want you to use is Bybit. Bybit is also very user friendly, and you can use it to trade gold or any CFD pairs. Now, if you don't have Bybit, all you need to do is go to your Play Store if you're using an Android, and you type search, you click search and you type Bybit. So when you type Bybit, it will come out like so. And mine is showing open because I've already downloaded it, but yours will show install. So you click on it and it will install you automatically. So I clicked open, and here I am. This is how the interface of Bybit looks like. So what you will do is that there is a place written more. This second place that is written more, you click on it, and then it will bring the next page. So you locate where is written gold and FS, this second place. You click on it to create your account. So you go to Bybit app, click on more, click on gold and FS. You will see create MT5 account. So it will show you create an MT5 account. Then you put in your preferred password and login details. Then you go back to your MT5 app, and then you select Bybit Live. It's Bybit Live 2. Select Bybit Live as your server, and then Bybit is your broker, of course. You select Bybit as your server and then input your password, and it will open you up in MT5. And there you will have to, this is my MT5. So just like you already know how to use your MT5, you see all the pairs that they offer. They offer gold, AUD, JPY, Euro JPY, US oil. So many of them, of course, BTC, USD, and so many gas and natural gas. So many of them. So, and voila. You can click on the link in the description box below this video to join or create your own account on Bybit. And if you want to use SNS as your broker, you can also click the link on the description box to join. So either of the two, or you can have both. You know why? Have SNS and have Bybit as your broker to know the differences and which one is better. So you can try them all out. That will be all from me for now. See you in my next video. Don't forget to share, like, and send in your comment. And above all, do ensure you go back to practice, watch this video over and over again so that you can get used to every